For joining us for this discussion. Has crypto bottomed out? So this morning, in my brief opening remarks, I touched upon the risk-off and deleveraging cycle. And I wanted to start off, Danny, with how has this bear market in crypto, where was the genesis of it? Bitcoin peaked out around November 10th of last year. But the fault lines seemed to emerge a few weeks earlier, looking in the macro environment. Those of us who watched the yield curve noticed a sudden flattening of it. So, what was the genesis of this risk-off environment?
Well, Zach, I think you could almost go back to 2008 for the actual genesis. We saw, in brief terms, two extended periods where governments just created a tremendous amount more money and sold a tremendous amount of debt. This was, phase one, GFC, and then phase two, pandemic. And it appears that we're observing the fact that there is only so many bonds that you can sell before all of a sudden the marketplace for bonds is weaker and interest rates start to rise. Now, you'll hear a narrative about the war and the inflation that's been caused by the war, but I think personally this goes, much, much further back than that. That's the departure point. As you said, the yield curve starts to flatten, and then things start to break. And I think we've seen this across multiple asset classes, whether it's high growth tech, bonds themselves, credit spreads, and of course crypto, probably the most highly leveraged of all assets, took it on the chin first. And crypto has the unfortunate dual characteristic of both being a technology which was getting hit, but also an interest rate sensitive asset which also got hit. And I think that was the beginning of the decline that we've seen.
Nouriel, you have been fairly pessimistic about crypto, and have long been seen as a crypto skeptic. So, in this last cycle, and looking at this correction, do you look beyond the risk-off in markets? Do you look beyond the deleveraging and think that there are other factors that drove and are continuing to drive this significant correction?
Well, you first spoke about the bear market, and now you speak about a correction. US and global equities this past year have lost 20%. Long-term treasury have lost about 20%. Credit has done poorly. But crypto, literally relative to November of last year, has lost on average 80%. So this is not a correction. With due respect, correction is when things go down by 10%. It's not a bear market. When things goes down by 20%, it's gone down by 80%. And those are actually the better ones because, out of 20,000 ICOs, a study suggests that 80% of them were a scam, a criminal scam in the first place. 17% of them are dead already. And the remaining 3%, about 600, the top two, Ethereum and Bitcoin, have lost 80% in the last 12 months from the peak. The other top 10 have lost more like 85 to 90%. And the other hundreds of them have lost 90 to 99%. This is not a correction. This is not a bear market. It's not a winter. Winter comes and then there is spring. There is not going to be any spring. It's not an ice age. After an ice age, there is maybe a sunny, warm stage. It's extinction to me. It looks like extinction, very frankly. I mean, when 99% of this stuff is dead, it's not like the internet, During the internet, you had 20pet.com, but it was a sound idea. Let's sell online dog food and cat food. If you didn't have the right business idea, you failed. And maybe 17 out of 20 failed, but the other 3 had a legitimate business model. This is just, to me, looks like total vaporware. It's extinction to me. It's not a bear market.
This is the moment where I was delighted Deepak Chopra was on just before. So I'll just sit and do nothing for a second.
Danny, by how much? You're a respectable, by the way, crypto firm. By how much has your market value fallen this past year? 80%, 90%? You tell me.
Look, let me
Tell me how much it's fallen.
let me just
Okay,
let's just
just
put
let me
crypto.
know.
Let's just put crypto in a very specific characteristic here. As you know, I came from the traditional finance space and spent many years on Wall Street, and I was witness to a lot of technologies that were created during that time, whether they were actually computer systems or credit derivatives or CLOs or CDOs. You know, there were many things created, and usually, with a few exceptions, the technology that was created in TradFi was created in a very robust, very stable, carefully planned, moated methodology. And it was built to last, and it did last, and these are the sort of things like your bank and brokerages accounts you understand today. Crypto is the antithesis of that. Crypto is got very low barriers to entry. It's got very broad distribution across the world and across different entities, and it's designed for rapid innovation. And because of that, you do see a proliferation of technologies. It's easy to try and fail in crypto, and the extinction cycle in crypto should happen at periods of times like this. We saw it in 2012 when Mt. Gox collapsed. There was little else around, but everything else collapsed. We saw it in 2016 when Bitfinex suspended withdrawals. They were hacked and the market went down. And we saw it again in 2017-18 when the ICO bubble collapsed. All of those declines were north of 74%, down to 94%, I believe, in the Mt. Gox case. And yet, 6 months ago, we made a new high. So I would agree with Nouriel to a certain degree. I think that those kind of asset declines in other asset classes spell the end, but I don't think that's true in crypto.
Actually, if we could just potentially have a walkthrough, we talk about deleveraging and risk off, but let's maybe wind back the clock a little bit to the levering and risk on of the system in this last cycle that started in around May of 2020, and how that eventually unwound. You know, talking about the unwinding in cases of cases that have some corollaries but are each unique. The Terra Luna ecosystem, the Block 5 Voyager cases, now FTX and Genesis, how those cases are different. Danny, if you wouldn't mind.
Well, I think, again, we could draw parallels from events that have happened in traditional finance markets when there is a big cycle of some kind and a poster child company at the top of it that usually has a poster child CEO, those companies that fail at the bottom of the cycle and they create a contagion. And I think that's exactly what we've seen. I think Terra Luna was the fatal flaw, and I think that created the problems at FTX, and that knocked on into many other companies. And the names that you mentioned, I think the issues have been quite distinct. UST was a network value built on a token that itself was based on the network value, and it was a circular reference that was fundamentally weak. It failed. 3AC was an over-leveraged hedge fund. We've seen that many times. Voyager extended credit when they shouldn't have extended credit, and FTX subverted client funds. I mean, these are all bad things, and they all happen usually in a contagion after an event like we saw early in the summer.
So, Nouriel, talking about or challenging your position on extinction, do you not see any merit in decentralized networks operating the way Bitcoin and Ethereum do? Do you not see any merit in tokens and validation in these permissionless and public ecosystems that are in some way decentralized? Would you never consider, or do you see no merit in the issuance of tokens in general, whether they're backed by real assets or backed by a network?
I think there is too much rhetoric about decentralization in the crypto space, but to me it looks like a fully centralized system. You know, the miners are an oligopoly of miners, many of them in shady jurisdictions like Belarus, Russia, until recently China, when there is no rule of law. Centralized exchanges are totally centralized, and we've seen the mess of them, one after the other, one collapsing. They don't even use blockchain for their own accounting, let alone for anything else. If they believe in blockchain, they should be using that. You know, the entire system of developers are prosecutor, judge, police, and so on. When something goes wrong, you know, code is not law. They revert it to their own convenience, has happened dozens of times. And, you know, and the massive concentration of wealth, of whales, you know. The study suggested that the Gini coefficient of inequality for Bitcoin is worse than the one of North Korea, is 0.86 for Bitcoin. In North Korea is only 0.84. In North Korea, Kim Jong-un and his family are a bunch of crooks controlling the entire country. So it's false. There is no decentralization. It's just false. It's totally false. And what people call blockchain projects, DLT, corporate DLT, enterprise blockchain, and so on, is blockchain in name only. 99% of those projects are private, not public. They're centralized. They're not decentralized. They're not permissionless. They're permissioned. We have a bunch of trusted validators validating transaction, and they're not trustless. Again, you have a group of small insiders that are validating transactions. So you call it blockchain because it's sexy, and it sells, and it has more multiple, but it's blockchain in name only. It's nothing to blockchain. It's a glorified spreadsheet with some permissioning, and you call it blockchain. The entire blockchain technology is just BS, and it's centralized too. So when you talk about decentralization, I just don't believe in it. I mean, there are more deeper fundamental issues having to do with the fact that logically, you cannot create trust with technology. It's conceptually impossible. In fact, time I will explain it to you. But people in this space don't understand this basic concept that you cannot create trust with technology. It cannot happen. It's impossible.
So would you ever create or support a token that uses some kind of permissionless or public ledger? Are you only a believer in permissioned private ledgers? Do you believe in distributed ledgers? Do you think that these have merit in the future, that they will continue to exist, or do you think all of these technologies become extinct?
I don't believe in decentralized, permissionless, public, and trustless systems. They don't work. If you're any corporation, why would you want to put on a public blockchain all of your transactions with your clients, with your suppliers, and so on? And the fact that you don't know who's behind that public key is nonsense. If I see a huge transaction, say, of Illumina being bought by some big player, it takes me 2 seconds to figure out that's Alcoa. And if I know that's Alcoa, I know everything Alcoa does. All the transaction with their clients, with their customer, with their supplier, and so on. There's no corporation in the entire world would ever want to put on a public, decentralized, permissionless, trustless, blockchain, anything. No financial institution. All these banks tried for years to create this network of blockchain, and they couldn't trust each other. JP Morgan doesn't trust Goldman Sachs because they don't want their own proprietary information that is very valuable to them to be on a public blockchain or shared with JP Morgan. That's why 3R and all these other projects, they all miserably failed. So if we're going to have something that's going to happen, yes, there'll be private, permissioned, centralized, and a system in which trusted validators are trusting transactions. You know, that's all, we already have it. It's Google Docs. It's a permissioned kind of system. It works. Nobody calls it blockchain. There is a space for these kind of things. Yeah, there'll be stuff that'll be on there, and there'll be tokens that'll be there, and they'll be safe, as opposed to stuff that is pseudo-decentralized, that is not decentralized, that has all the risks of the current system. So, no, I don't believe in anything that truly decentralized. It's not going to work. So we have reasons. I mean, there are people who have gotten Nobel Prizes in economics to study why we have institutions. Why do we have institutions? Why do we have corporations? Why do we have banks? Why do we have governments? This idea that you can have a totally anarchic, libertarian world where there is no Amazon, there is no Google, there is no Goldman Sachs, there is no government, and everything is going to be decentralized, It's just a pathetic utopia that just doesn't make any sense. In a world in which we have geopolitical conflicts, where US and China may go to war with each other, you think that the US is going to be just a beautiful, decentralized, utopian world where there is no government, there is no army, there is nothing, and we're going to fight China or any other strategic rivals like Russia or Iran or Korea, what? In a decentralized way? That's the world you're thinking we're going to go to? It's just nonsense, total nonsense.
Well, interestingly, of course, the origin of the internet that Berners-Lee created was to precisely do that, which was decentralize the command of nuclear weapons around the world so that we exactly weren't vulnerable to that kind of thing. So I think the internet is decentralized in its very most native form. And I can imagine, there is always frustration with fake projects. It speaks to what I was saying before about the lack of barriers to entry, this creative, destructive, and then eventually anti-fragile system where good networks live through living and then improving and being attacked and improving and being attacked and improving, as Bitcoin and Ethereum and several other networks have done. But I do think we need to look at what people are now doing, with these technologies, and I would refute Nouriel's view on this when I hear, as I often do, new things from day to day, that Dr. Chopra is creating metaverse wellness houses, and I think that's an absolutely fantastic idea. Now, could you do that in a Google Sheet? I'm not sure. Could you transfer value? Could you transfer identity and provenance through a Google Sheet in a unique sense? No, you definitely can't. And I look at other projects at the moment that are bringing, really for the first time, in the 12 years I've been doing crypto, active value. So we look at the Arweave, putting Instagram images permanently on record, project I'm involved in with Manchester United Football Club, bringing NFTs and essentially a two-way channel between the club and their billion fans. A great deal in London last week where Aberdeen Asset Management, a $300 billion real estate manager, is going to start putting documents. You talk about lack of documents. There will be lack of documents because these things are going to go on this Archax decentralized system. Now, you go back to 2017, 2018 in the ICO bubble and collapse. It was true. A lot of this was foundationless. But I think there are plenty of examples now of really good tech that is bolting on to big distribution networks and promulgating throughout the world.
Going back to the discussion on the cycle, has crypto bottomed, or are we potentially within the visibility of a bottom? Looking at the risk on and the levering of the system, the risk off and the deleveraging of the system, there seem to be potential indications that at least this risk off and deleveraging could be coming to a potential end. On the deleveraging side, we've now seen one of the most reputable and in many ways a sound lending firm. They had some very bad underwriting, but Genesis has now gotten into difficult waters and difficult territory. So if one of the higher quality organizations, institutions in the lending space is now facing difficulty, having to recapitalize, potentially being wiped out, does that not mean a lot of leverage has now been washed out of the system? And again, if we're expecting eventually rates to peak and potentially a Fed pivot, would those two things not potentially indicate a bottom of this deleveraging and risk-off cycle and how it's affected crypto? Danny.
I don't want to get too specific about individual companies, but let's just, look at Genesis as the general category of prime broker. They're probably the leading original prime broker in the crypto space. What does that mean? It means that they can custody your assets, they can make trades, they can offer you derivatives, they can make loans. Those kind of organizations, which would be Cowen, Merrill Lynch, JP Morgan in the real world, are usually banks. They are bank-backed. They may have some kind of FDIC insurance cover at lower levels, and they may operate on exchanges, right? And that's some of those things are available to crypto prime brokers, and some aren't. Now, the well-trodden system of prime brokerage in TradFi is itself not without fault. Credit Suisse almost fell over with Archegos because of their prime brokerage problems. I think that the way to look at the deleveraging and the way to look at price, if we're assuming, as I do, that it's not an extinction event, is the coins get liquidated first, the collateral gets liquidated first. This was true of FTT tokens, true of UST tokens, true of Terra Luna tokens. Then the corporate failures happen afterwards, as these things, if they are actually accounting for them, are accounted for. I personally think that the Genesis DCG thing will work out. I think it's a liquidity mismatch, not an insolvency. That is going to put them under pressure, but I think, like Credit Suisse, they'll work it out.
Nouriel, do you think crypto will bottom or go to zero?
No, I don't think it's bottomed out. I think the worst is still to come. And I think there is a fundamental misunderstanding because most people in this space don't even know basic monetary theory. They don't know what's a currency. Cryptocurrencies are not currencies. They're not a unitary account. They're not a scalable means of payment. They're not a stable store of value. They are not a single numeraire. So calling them currencies is a misnomer. So first, people don't understand what a currency is. Secondly, people in this world don't even understand what a financial system and banking is. This year, who won the Nobel Prize for Economics? It was not just Ben Bernanke. It was also Diamond and Dybvig. If you've done any PhD in economics, you know the basic theory of bank runs. If you have a bank or a financial institution that has a maturity mismatch, you borrow short and the deposit can run right away and you lend the longer term, that maturity mismatch can lead to bankruptcy even if you're illiquid, let alone if you are insolvent, because if there is any concern about the quality of your assets, people run and then you get illiquidity becoming insolvency. Now, how do we resolve this problem? We resolve it by having a lend of last resort. Central banks were not created to smooth inflation and growth. They were created to avoid bank runs, like the one of 1908 that led them to the Fed 1913, okay? And then you create deposit insurance. However, if you have a lend of last resort and you have deposit insurance, you have moral hazard. You're taking people's money, you can gamble and make more risks. That's why there is strict supervision and regulation. There are strict capital requirements. There are strict liquidity requirements in a sound banking system. Now, in crypto, the lending platforms are like banks. They have the maturity mismatch. They have no transparency. The lending is just garbage. Is it lending for a mortgage or for a business loan? No, it's a lending to speculate and leverage on the rising asset prices of other shitcoins. And then they went, even Bitcoin has gone from 69 down to 15 now, let alone the other ones. So that type of lending is just speculative junk. And when it collapses, people run. So all these platforms are collapsing one after the other. And Genesis is as lousy as any other one, frankly. Is no better than any other one. So those ones are going to all collapse because they have maturity mismatch, they have no lend of last resort, they have no deposit insurance, they have no capital, they have nothing. They have nothing to back in them. So there's a massive run. And the exchanges, they're not exchanges. In a true exchange, your money is not under the custody of the exchange. It's not part of the balance sheet of the exchange. It's separate. These exchanges are not exchanges, they're broker-dealers. They're like Lehman. What you give to them is part of their balance sheet. So if a bankruptcy occurs, you're totally pari passu with all other creditors. So you're screwed, like it happened over and over again. So if you're any fool keeping your money on an exchange, you know that these exchanges, for lots of reasons, whether it's fraud or mismatches or risky businesses, they can all go broke. They can go bankrupt. They can be subject to runs. You're really dumb to put your money there. These are not exchanges. These are broker-dealers. You're putting your money in a Lehman that has no transparency, has risky assets, and when things go wrong, you're pari passu with everybody else. Does anybody want to put a penny into these things, these exchanges, or these lending platforms? If you know anything about monetary theory banking, you know you shouldn't be there. But people don't understand this stuff, and they're dumb.
Danny, so two questions. We're just going a little bit over time, but please don't feel rushed because I'd like to really understand your views on these. So addressing one of Nouriel's points. So Nouriel is discussing the run on the banks, and without a lender of last resort, that there's no hope of recovery. In another discussion we had, he also said that when withdrawals are suspended, that means it's game over. That there's no difference effect. There's nothing to prevent illiquidity from becoming insolvency. Do you think that there is a potential for situations of illiquidity not to become insolvency? Could firms like Genesis potentially survive, and can there be a market solution, or will illiquidity always become insolvency? And secondly, to address Nouriel's points on exchanges, and we've been talking about centralized platforms operating within a decentralized, or what is meant to be a decentralized ecosystem. What's been happening in decentralized finance? What are some of the hopes and green shoots that you see in the truly or more decentralized platforms?
Okay, so I think we have to sort of put exchange configurations into a little bit of a bigger perspective. Crypto went down two tracks. It went down a track where people were trying to shoehorn crypto into the traditional finance bucket and framework. That has happened extremely slowly. We now see MiCA in Europe. We see President Biden's executive order. We see some movements in Asia as well, here in Dubai as well. And these frameworks, and Switzerland, very advanced. These frameworks have taken a long time to come along. In the meantime, there's been all this focus on countering financial terrorism, anti-money laundering, source of wealth, source of funds. And I think that was a mistake, because it detracted away from what should have been the first job, which was looking after protecting clients and looking after client assets. And we wasted so much time on that. The levels of financial crime in crypto, if you look back to the BICC fines, the HSBC fines, the Westpac fines, everybody's been at it. The financial crime happens all over the place. So to focus on crypto, waste all that energy, and leave customers unprotected was a shame. That's when exchanges went to less regulated places like the Bahamas, and we created these kind of problems. And that will now be, if we have a non-zero outcome in this industry, that will now be corrected for sure. The SEC are already active with every single American-based crypto company right now going through that very process as a result of the FTX debacle. So that's one thing. The second thing is, is cessation of withdrawals a death sentence? Well, cessation of withdrawals is sort of almost like the crypto version of, call it voluntary reorganization. Not Chapter 11, maybe too fancy a term, but sort of voluntary organization. And I think the best case that happened, which was, nearly gave me a heart attack in 2016, was the Bitfinex hack, where 74% or 64% of the assets, 36% of the assets were hacked. And it was a big number for the community, and it was a very sensitive time for the community. That was withdrawals were paused. That was reorganized. There was a token issued for recovery that was a beneficiary of future earnings, and that whole ecosystem recovered. Now that, I would say, is rare. Usually, these terminations of withdrawals are a very bad sign. Obviously, with FTX, it was a fatal sign, but it's not de facto fatal.
All right. Well, thank you so much, Danny and Nouriel. I would have loved to spend another half hour having this discussion, but we are over time. Thank you, everyone in the audience, for joining us today. It looks like a full room, so I hope you enjoyed hearing both sides of this discussion on whether crypto has bottomed.